Okay, greetings students. This is a second part of cash flows, which is the first part we learned will be cash flows from operating activities due to day-to-day operations of the business. Okay, the second part will be cash flows from investing activities. Alright, so cash flows from investing activities is due to investment. Okay, so when we talk about investments, right, we are looking at two things here. We'll be looking at how much we invest in non-current assets, as well as how much we invest in short-term investment. It will be under current assets. The only reason we are looking at current asset is because we have short-term investment, which is classified under current assets. Alright, so the whole purpose is to figure out how much we pay when we purchase non-current assets, and how much do we get when we sell our non-current assets, and also how much we get when we sell our investment. Alright, so how do we find the amount of money, or we call it the proceeds from sale of non-current assets? This one, we have to open the ledgers. So depending on the questions given, right, we might need to reconstruct certain accounts. Okay, either it's proceeds from sales of non-current assets or payment for purchase of non-current assets. We have to open sales of non-current assets. So if you still remember in year 11, sales of non-current assets was open because we want to find gain or loss of sales of non-current assets. The whole purpose is to figure out, do we make a gain or do we make a loss when we sell our non-current assets? Okay? So the first thing is to understand this account itself. How do we understand this account itself? First thing first, there are 4 items inside this account. The first item will be non-current assets. Okay, if it's property, plant, equipment, we'll write sales of property, plant, equipment. Okay, when we sell property, plant, equipment, what happened to property, plant, equipment? We will credit it, right? So when we credit property, plant, equipment, we will debit sales of property, plant, equipment, and then we write property and plant equipment on the debit. So this particular entry is based on double entry. Alright, so the first thing to write will be here. The next thing will be accumulated depreciation. Okay, so this accumulated depreciation can be given from SOFP, or it can be given as additional information, depending. And then we have cash at bank. Okay, so this cash at bank would be how much do we sell it for. So how much do we sell it for will be under additional information. Gain and sale, gain or loss of sale will be under SOCI. So it can be either gain will be here, because gain on sale have to go to profit and loss on the credit side as an income. Loss of sale is on the credit side of this account because it has to transfer to income statement on the debit side of profit or loss. Alright, so let's say how do we open the rest of the account? Alright, so again, the first account will be only 4 information. When we sell the non-current assets, we debit sales of non-current assets because we're gonna minus from non-current assets. Accumulated depreciation will be this side because we have to minus accumulated depreciation on the debit. Then we credit our accumulated depreciation over here. When we sell something, we have cash at bank on the debit, and that's why we will credit our sales of NCA here. Now, loss or gain depends on whether the gain is here because it has to transfer to profit and loss. The loss is here because you have to transfer to profit and loss as an expense. Alright, let's go further. Look at these 2 other accounts. So sometimes we have to open accumulated depreciation account in order to find how much of the accumulated depreciation belongs to the non-current asset that we sell. So opening balance, closing balance get from SOFP. Depreciation get from SOCI or additional information. And then we get this amount under sales of NCA. So minus amount when we sell our non-current assets. When our assets is sell, we have to minus our accumulated depreciation. Alright, so positive sign here, negative sign here because it's minus asset. Okay, then when we open our non-current assets, the whole purpose is to find how much money that we actually purchase for our non-current assets. So opening balance get from SOFP, closing balance get from SOFP, positive sign relate to BD, negative sign relate to CD, alright? And then where do we find our cash at bank? So when we buy, cash at bank will be on the credit. We credit cash at bank, so we debit non-current asset. When we buy, non-current asset increase. Okay, when we sell, we actually write sales of non-current assets. Okay, so this amount it get from the information. Alright, let's say we're gonna apply this information. Okay, so let's say this is the amount that we receive from our question. SOFP, we have motor vehicle, opening balance, closing balance. We have accumulated depreciation, opening balance, closing balance. We have gain on sale of motor vehicle. We have depreciation of motor vehicle. And then we also have information about how much you receive from sale of motor vehicle. Now, how do we open account? First thing first, right? We want to find out which motor vehicle we managed to sell because we have gain on sale. So the first thing is to open sales of motor vehicle. Okay, open sales of motor vehicle. Remember there are 4 information. The first information is to record the motor vehicle that we managed to sell, the cost price which we do not know. So write motor vehicle first and leave it blank. The next one is to figure out how much accumulated depreciation, alright, for the motor vehicle. Okay, so how do we find how much accumulated depreciation for this motor vehicle that we managed to sell? Alright, so So this is a bit tricky, right? Okay, so basically we need to open our accumulated depreciation account. Okay, so 5,000 depreciation opening balance have to add in with the depreciation that happens for the whole year, 4,000. So 5,000 plus 4,000 is 9,000. But at the end, we only have 3,000 of accumulated depreciation. So means to say the accumulated depreciation that got minus is 5,000 plus 4,000 minus 3,000, 6,000. Why is that so? It means beginning we have accumulated depreciation or total depreciation of 5,000. And when depreciation happen, it should increase, right? So 5,000 plus 4,000 is 9. However, at the end of the year, we only left with 3,000 depreciation. Means to say, the non-current asset that we sell, right, the accumulated depreciation was the differences. 5 plus 4 minus 3, so 6,000. So we put it over here. Now, how much cash we get from the sale of motor vehicle? When we get cash at bank debit, so we credit sales of motor vehicle 5,000 over here. So, and then the gain will be over here. Gain of sales of motor vehicle will be over here. Alright. Why? Because gain has to transfer to profit or loss on the credit side as an income. So 8,000 will be the balancing figure. So this 8,000 means what? The cost of the motor vehicle that we sell to somebody. So the cost is 8,000. Accumulated depreciation is 6,000. So the book value is 2,000. But we sell it at 5,000. Means our gain on sales is 3,000. So does the account make sense? Again, so this sales of motor vehicle record the cost of the motor vehicle that we sell, and this is the purpose we open it. Accumulated depreciation belongs to the depreciation of that motor vehicle we sell. Alright. Alright, so this is only one part of the thing we managed to get. Okay. We continue from here, we open up our motor vehicle account. Why? Because motor vehicle we sell but only increase at 21,000. So opening balance here, closing balance here, do double entry. From here to here. Then we realize that on the positive sign, something is lacking. Okay, so motor vehicle increase because we buy more motor vehicle. We write cash at bank 9,000 as a balancing figure. So how do we record this in the cash flows from investing activities? So the cash at bank given will be proceeds from sales of motor vehicle. This amount that we get from motor vehicle increase because we buy. We write payment for purchase of motor vehicle. So in total, we only have net cash from investing activities minus 4,000. Okay, what happens if it's investment? So when there is sale of investment, same thing, have to reconstruct sales of investment. If we sell non-current asset, we have to reconstruct sales of non-current asset. Alright, so sales of investment only got 3 items. Why is that so? Because sales of investment doesn't have depreciation, doesn't have accumulated depreciation. So we need to have the cost of the investment followed by the amount that we pay, and then that will be our gain or loss of sale investment. So very similar to the sales of non-current asset. The first entry would be the investment. When we sell investment, credit investment, debit, this account called sales of investment. That's why we have investment over here. Alright, the next thing is when we sell, we record money. So cash at bank would be debit, then credit, sales of investment, cash at bank. Alright, so gain or loss depending where we transfer our gain. So gain will be here because transfer to profit or loss as an income. Loss will be here because transfer to profit and loss as an expense. So you need to imagine the profit and loss account. Profit and loss account, income on the credit. That's why here move to credit, here move to debit. So balancing amount will be the cash at bank. So for example, you have investment 4,000, opening balance, closing balance 7,000, and then you have gain on sales investment and how much you receive from your investment. Let's say we open our account. Okay, sales of investment, first thing first, we do not know how much is the cost, so we leave it blank, write investment, leave it blank. Okay, so this gain will be over here, write it underneath, and then the bank amount. So the bank amount is 17,000. Alright, so we write cash at bank 17,000, then we realize that balancing figure would be 17,000 minus 8,000, we have 9,000. So it means to say the cost of the investment is 9,000. So alright, that we sell. Okay, so moving forward, then we do the investment. Okay, it's 4,000 opening balance. Alright, and then we have closing balance, sorry. So this should be the closing balance. Alright, not cash at bank. So this is the balance carry down of 7,000. Alright, and then we do the double entry. 9,000 is here. Then we figure out that we actually buy 12,000 worth of investment. So same thing, when it's actually transfer, okay, this is proceeds from investment, 17,000. This is purchase of investment, payment for purchase investment, 12,000. Alright, So that's all how to do net cash from investing activities.